Hello, everyone, and good evening, everyone. Welcome all of you to this series on internal audit. And we have with us today Honorable Vice President Chiranjot Singh Nandaji from North Region, and we are very proud to have Nandaji over here, being his internal audit, board of internal audit. He has been always, and many people correlate Nandaji with internal audit. So, welcome, Nandaji. To you, and we have Mr. Sundar Krishnan, who is internal audit head at Life Insurance Corporation. Welcome, sir. And he will be taking us through today the risk based internal audit. The day by day, the importance of this kind of audit is increasing because the new types of risk are being actually now coming with the innovation of technology. So, with his exposure and experience, will be helpful to all the participants. So, welcome today's faculty, Mr. Sundar Krishnan. And we always welcome and thank Rakshit and Dipti for being the moderator for this session, taking out your time. And our chairman, Mr. Prakash Sharma, for the term, for this tenure, for this year. So, he is also supporting and taking this board of internal audit to the greater heights, along with the support of C. Aarti Bansal, who happens to be the secretary of the board. With these words, I welcome all my dear participants. And today, friends, we had a council meeting today and yesterday. We have entered into this 76th year of our ICAI, and we had on 1st July celebration of Foundation Day, and lot of new rules we have actually approved in the council, like relating to the networking of the firms, aggregation of the firms, and Chat GPT has now been approved, and it is available for the members at free of cost to all the members. So I request all of you to please make use of this Chat GPT tool, which has been circulated to all of you. With these words, I welcome all of you, and lot of details will be shared by Nandaji, our Honorable Vice President, to all of you. Over to Shri Nandaji.
Thanks a lot. Thanks a lot, Preeti Man, the Vice Chairman of Internal Standard Board and Chairman of Women Member Empowerment Committee. I also see my very dear old friend, Shri Sundar Kishan, Madam Aarti Bansal, the Secretary of this board, Mr. Savla, Madam Dipti Jain, and all participants have come here to go home enlightened. So, ladies and gentlemen, I wish you a very good morning, very good evening, and I am deeply honored to be amongst you all to address this webinar on risk-based internal audit and its importance to the business. It gives me immense pleasure to address such a distinguished gathering of professionals and experts in the field of audit and risk management. In today's rapidly evolving business environment, the role of internal audit has become more critical even than before. It is no longer sufficient to merely check compliances and financial statements. Instead, internal auditors must proactively identify and mitigate risks that could potentially impact the organization's objectives and strategic goals. I would like to share that yesterday morning we had the council, but on first, after the function, I went to Manesar to address a gathering of internal audit professionals from Larsen and Toubro L&T. And when I spoke to them, the basic point was that internal audit is a sunrise industry where changes occur every now and then. So we have to make ourselves professionally acclaimed, to make ourselves technically sound. And I want to very candidly put across that the concept of risk-based internal audit is not just a best practice. It is a necessity in today's complex and interconnected world. Risk-based internal audit enables organizations to prioritize their audit efforts based on the level of risk exposure, thereby ensuring that resources are allocated efficiently and effectively. By focusing on key risks, internal auditors can provide valuable insights and recommendations that help management make informed decisions and safeguard the organizational assets. Furthermore, the importance of risk-based internal audit extends beyond regulatory compliance. It contributes to the overall governance of an organization by promoting transparency, accountability, and integrity. It fosters a culture of risk awareness and encourages proactive risk management practices at all levels of the organization. As we navigate through uncertain landscapes and disruptive technological advances, the need for robust internal audit functions has never been more evident. Organizations must continuously adapt and evolve their audit methodologies to keep in pace with emerging risks and regulatory requirements. Today's webinar serves as a platform for us to exchange ideas, share experiences, and explore innovative approaches to enhance the effectiveness of our internal audit process. I encourage each of you to actively participate in the discussions and take full advantage of the opportunity to broaden your knowledge and expertise in risk-based auditing. The best part of internal audit is that the moment you start understanding is the moment you get into it, you feel you know everything. And I'm reminded of a couplet which says, क्या यूं ही चंद लम्हों में पढ़ लोगे मुझे? क्या यूं ही चंद लम्हों में पढ़ लोगे मुझे? मैंने खुद को लिखने में बरसों लगाए हैं. So internal audit as a discipline has emerged after hard work of so many years and indulgence of so many people. In conclusion, I would like to express my gratitude to the organizers, speakers, and participants for their commitment to advancing the profession of internal auditing. Together, we can make a meaningful impact on the future of audit excellence and contribute to the sustainable success of business worldwide. Thank you once again for your participation, and I wish you all a productive and insightful webinar ahead. Thank you. Thank you so much. I also take the opportunity to welcome Ms. Lakshmi, who has joined in. So my best wishes for the entire session, where you learn things in the right perspective and ultimately perform in tandem with the expectations of not only the management or the clients, but regulators and government as well. Thank you. Thanks a lot.
थैंक यू वेरी मच नंदा जी. एंड नंदा जी, आपने जैसे बताया कि चंद लम्हों में तो हम नहीं सीख पाते हैं, इसीलिए हम हर एवरी वेडनेसडे वी आर कमिंग 5 to 7 or 6 to 8
Very
to
good.
deliberate on internal audit. So
बहुत
thank you very much,
बहुत
and I
जरूरी है,
request
very
Durgesh
very
Kabra ji to give. Yes, sir. Thank you, sir. And
thank
I request Durgesh Bhai to give a very well-deserved vote of thanks to our Honorable Vice President.
Thank you, Preeti ji. It's indeed a pleasure for me to be part of this webinar, which is being organized on the risk-based audit, which has become very important nowadays, and you need to deal with three different kind of risk, and which has been well explained in a very short address by our Vice President, Sir Srinanda ji, and for that, the time which Nanda Sahab, in spite of having the busy schedule of the council meetings and other agendas, he has addressed to all the participants. I think that's a wonderful task. He's doing yeoman services for the members and students at large. More particularly, I would say that his interest in the areas of the internal audit, digital audit and assurance, and the capital market, three areas where he loves these areas and doing wonderful tasks and guiding the council colleagues like us, Preeti ji, myself, and all others, so we can perform in a better way at the council. Thank you very much, sir, for being part of this webinar, and wish that all the members who have attended this particular webinar would definitely have a wonderful learning today, and wish Preeti ji also to continue these kind of webinar continuously for the benefit of the members at large. She is doing fantastically well at this committee, as well as women's women's empowerment committee, Women Member Empowerment Committee. Very recently, she had a wonderful conference, which was known as the Conclave, Ladies Empowerment Conclave at Mumbai, which was attended by more than 500, and that was wonderful, where every woman who attended that particular conference has praised like anything. So all those women have got the fantastic opportunity to network under the leadership of Preeti Ben, and I wish her fantastic success in her endeavors. Thank you very much.
Thank you, Durgesh Bhai, for being here and addressing the participants. Thank you so much. And now I request Rakshit and Dipti to take the charge. Take the charge. Thank you so much.
Thank you very much, Preeti ma'am, Kabra sir, and Nanda sir for a very wonderful introductory remark and giving us insight on how internal audit is very important in this changing business environment. So, yeah, good evening, everyone. I hope you all are doing great and just pretty much excited about today's webinar on risk-based internal audit and its importance in business environment. So yeah, first and foremost, I would like to extend my heartful thanks to our esteemed institute as well as this leadership team for organizing such a insightful webinar. And yeah, when it comes to enhancing knowledge and uplifting professional growth, institute has always been on the forefront of fostering knowledge. And yet this webinar is also one of the example of our institute's unwavering commitment towards professional growth in this wide changing environment. So yes, risk-based internal audit definitely one of the key component in today's modern business environment where every resource, we have very limited resource and the objectives are very wide. We as an auditor are always concerned with allocation of resource and prioritizing audit resource for a effective and efficient audit approach is definitely one of the key aspect of the audit. But however, it is not only, it does risk-based audit not only enhance the audit procedure and effective and
Rakshit,
efficiency of audit
can you
approach.
please directly introduce the speaker now?
Yes, ma'am.
Yes.
Sorry. Yeah.
Yeah.
So yeah, we have with us Mr. S.V. Sundar Krishnan, who has expertise in the field of risk management and internal audit with a career span of over 3 decades. He currently is working as a Chief Risk Officer of Life Insurance Corporation of India and has been a part of digital transformations. He has also served as a Chief Risk Officer of Reliance Nippon Life Insurance. He has been on the board of various companies. And yes, not to forget, he has also been named as one of the best professional of the year by Institute of Chartered Accountant of India. So yeah, we have with this deep understanding of SV Krishnan's understanding on this internal audit, I would like to welcome Mr. SV Sundar Krishnan to give us insight on this valuable topic.
Thank you so much. Hope you are able to hear me clear.
Yes, sir. Yes, sir. You are audible.
Yeah, I think it's very nice to be invited by CA, homecoming for me, and to meet old friends Nandaji and Kabraji, and of course Priti Savlaji. And nice meeting you, Mr. Rakshit Savla. And hope I add value to the intentions of the institute. Basically, I'm sharing my experiences of not 3 decades but 4 decades. I started 84, the audit profession, and today is 2024, so exactly 40 years now. So what I would do is I would share my expertise and experience, and then hope it adds value to the internal audit professionals who are lined up here. And if anybody has any question, please feel free to raise it either later or during the conversation if it is important and relevant. And with that, I will share my presentation. So many thanks to the CA Institute for welcoming me again and again. And also old friends, Nandaji, Kabraji, Priti Savlaji, and others. So thank you so much. I'll just share my presentation now, which is risk-based internal audit. So just hold on, share screen. That's it. You're able to see my presentation? Hello?
Yes, sir. Yes, sir. We are very much able to see your presentation.
Great. So Risk-based internal audit, I think, came in somewhere in the 90s. I used to be auditor traditionally in the 80s. And I remember going to a very large organization with lots of registers, manual sheets, but well controlled still. And very large organization, and the controls were admirable still. And we used to take the controls check and then sign the audit report. And of course, I've done several audits like that, not risk based, but balance sheet based, financial analysis, also company law records as per company law, and various other regulatory provisions of various other laws. I remember auditing units in SEEPS, which is Santa Cruz Electronic Export Processing Zone, Free Trade Zone, and so software companies, and trying to add value. I also audited one of electronic, not electronic, the turnkey projects company, and they actually hired me additionally to provide value to the contract-based accounting, especially since contracts would always be under WIP. And how do you value the receivables, payables, and various provisions and various costs? Very interesting. And then, of course, it has to be all agreed by the clients, and very important. And not only our client, but client's client, more importantly. So traditional audit also add value. It's not that they didn't have value. It was dependent more on experience of the person, the value that the person brings into the table, the business savviness of that person, and how he could add value to the business. So traditional audit also was important and useful. But what is the difference with risk-based audit is what we will see. First, we'll go through what is risk-based audit, and then we will go on to the comparison and how does it add value to business, and how does it provide assurance to the stakeholders being primarily the shareholders, the public, the government, the tax, the employees, the management, of course, and the board of the company, more importantly, and many others who are stakeholders. So at the end of the day, internal auditor's function is to provide assurance to the stakeholders that the company that is being audited is being managed well enough to manage the risks in a very effective manner. You can only manage the risks in an effective manner. You cannot avoid risks. No risk, no gain, no business. So risks are important. At the same time, they have to be managed well within the appetite of the enterprise or organization. That's very important. So this is what I thought I would add value to. And let's see the Anthem's case. Here is a company in the US, which this was actually in 2016 or 17. I just moved to the second slide. Can you see the anthems? My God. You are screen sharing is what my screen says. And I'll try and do stop share and come back. Stop share screen. I'll come back. Can you see the screen now? I don't know. Let's see the next slide. Otherwise, I can mail this presentation to somebody in the institute and they can play the slides. So, okay. So here is a company which was called the Anthem, and there was a massive data breach in that company. Tens of millions of customers' data got lost. It was largest in corporate history at that time. After that, it's been chaos all over the world. Personal information was compromised: name, birthday, medical ID, social identity, and social security number, street address, email address, income data, employment information. The damage was assessed. It's not is being assessed. This is a whole slide. Not yet known whether credit card data is compromised. I think even the credit card data got compromised. And of course, FBI investigated. It was a very sophisticated attack. And the same day, actually, the CEO filed a complaint with police and FBI. It was largest in the series of companies to suffer data breaches, and very swiftly informed the authorities. And of course, the CEO personally apologized to its customers and members. In a very extremely good email. And everyone, he said that even my data has been compromised, and I'm extremely sorry for that. Everyone used to urged to change their passwords, and all customers would receive some identity fraud protection. And hackers obtained credit card data of 40 million target shoppers, as well as personal information of 70 million customers. The worst part was many customers were called later by many fraudulent groups, and they were asked to share their password ID, and foolishly they shared to the fraudulent group, and then more frauds were perpetrated later. So you'll have to be careful when such things happen. Now, whom do you share data with? Who calls? Because data is available to fraudsters, and there is something called dark web where all kinds of data is available, and everybody has to be careful with financial data. Maybe check bank accounts constantly, and be careful with records, because you don't know what links you would click in your SMS or email, and then you will get trapped and lose data. And this is quite important to understand, and therefore every enterprise that you audit needs to be savvy, needs to ensure that all employees are savvy, trained in cybersecurity, so that if breaches occur, then they are able to recoup. And India is one of the top 3 countries being hacked world over. So if that's the position, you will have to be more careful. And more do we flourish, more would be the hacks, more would be the problems, more would be the ransomware attacks. I remember, when I was in one of the company, the group company which shared our data had a ransomware attack. But, we were able to manage very savvily because of process controls and patch management that we did. All that stoppage was only for an hour, 1 hour for one server. And that server we isolated immediately. But certain group companies were down for 4 days. So, you have to be careful. How do you manage? And especially if you are in the retail segment, you cannot be down for so many hours or days. So you'll have to be careful. How do you manage the reputation risk? More importantly than the financial risk, because if you're a listed company, your share price can go down. Many of the companies which have been hacked world over, the share prices have had an impact and had gone down. So it's very important that you follow cyber savviness. And this is just one of the emerging attacks. There are many more areas, climate being one of the important risks that we face. Therefore, government has made provisions for ESG controls and environment, social governance. And there is provision in all the BFSA companies to have directors who are ESG experts. Similarly, there are many other emerging risks that we need to take care of. And this is very important to internal audit profession, because you are now following risk-based audit, and so you have to be aware of the risks. Many times I found my clients asking me, Sundar, you have not pointed out this in your audit reports. And you have to tell them, no, this is there in this slide and this presentation. And yes, sometimes they miss the bus. So you always prepare an executive summary and ensure that you highlight also orally the key management so that they are aware of the issues that the company faces. Why it is so important? Because we are objectively driven. We don't want to super highlight issues at the same time under highlight the issues. Number one. Number two, they are busy with the businesses and more problems to solve. And so you are going to add more problems by bringing out key issues. But at the same time, you are also solving their problem, because every issue would have several recommendations to follow and action plans to implement the recommendations, more importantly. And therefore, if you do not have a recommendation, there is no point in having an audit issue. And therefore, how effectively you implement recommendations is very important. And what value you add to business is very important. And therefore, there is governance in terms of policy making by the board. There is an identification of risks in terms of risk assessment for audits, measurement of risks, high, medium, low, or you can have even 5 categories: very high or critical risk, high risk, very high risk, medium risk, low risk, and no risk. And monitoring of that in terms of follow-up, in terms of dashboards, in terms of scores, in terms of identification, in terms of quantitative risk assessment and qualitative risk assessment. Qualitative risk assessment is judgmental risk assessment. Quantitative is having scores and values and color. And then monitoring of that, and then mitigation of that. Mitigations are very, very important, because this is where you add your value. And this is where you ensure risks are mitigated. This is a fundamental difference between traditional audit and modern audit. Traditional audit used to highlight issues, but the follow-up was not so great. And again, follow-up was not in terms of action plans and implementation of action plans, unless the auditor is very persuasive, tactical, strategic in nature, by experience. So, of course, but the traditional audit is to bring out big issues. It's not that there was no issues brought out, but some kind of systemic orientation, systematic orientation, system controls being implemented was probably not so much followed up. So that's the difference. And you could have governance in terms of committees in the enterprise that you audit, regulatory reporting, culture, quality assurance of various processes, of various departments or functions, consistency again in documentation, consistency in processes, maybe ISO, orientation of all processes. You would have a group risk if it's a conglomerate group. You would have a group audit if it's a conglomerate group again, or a single audit, internal audit, and a single risk management if it's a single company. Again, you would have experts reviewing work, processes, independent review, adding control, adding process, adding system, and of course, group legal and compliance framework. Many companies have separate legal, separate compliance, separate corporate governance, separate strategy orientation, and they do their own follow-ups. ALCO, again, very important, asset liability management. And this is part of the governance layers. Similarly, you have to have risk identification, measurement, and monitoring. Risk-based audit is dependent upon risk assessment. Without risk assessment, you cannot start the audit. Therefore, it's very important that you ensure processes are well mapped in terms of process, sub-process, department first, then sub-department, then process, then sub-process. And for each sub-process, many what could go wrong are risks. And for many risks, many controls, and then many more checks than the controls to check the controls. You could do an automated check, you could do a manual check, you could do overview of the check, you could do interview of the check. So these are the ways you check whether the controls work or not work and risks are managed effectively or not. Again, one of the traditional audit process was to check the controls, regardless of what the risk that control manages. Whereas in risk-based audit, it is focused towards risk management. Therefore, those controls are important, which ensures risks are mitigated. Therefore, if you have too many controls to check, it's better to check key controls that manages risk. That's the difference between risk-based audit and traditional audit. And again, we should have enterprise that captures losses, does an RCA, root cause analysis, why this loss has occurred, why there is a missed opportunity. Then you could have key risk indicators, dashboards that points out quantitatively the risks in terms of high, medium, low, or 5 categories, and scores And then you would have a very robust technology called GRC, Governance, Risk and Compliance, which captures risk management module in risk management module, audit issues in audit module, compliance issues in compliance module. There is a good segmentation of all the three. At the same time, there's a good sort of cohesiveness of all the three, so that a single chairman or MD is able to see all the three together. Also, the compliance personnel would know what the risk issues are and audit issues are. The risk personnel would know what compliance issues are. An auditor would know what compliance issues are there. So this is very important in GRC. So large companies especially need to have a good GRC in place. And mitigation of the risk in terms of processes, in terms of systems, in terms of controls, in terms of technology, in terms of business control automation, in terms of quality assurance, in terms of readiness assessment, etc. So this is all important for the building blocks for a COSO framework. This was one sample. There could be many ways to approach the problem. I'm just giving you an example of a risk-based framework. And if you see, the reason why I'm touching risk management is audit is very intrinsic part or adds value to risk management, because internal audit is a very important pillar there in terms of risk assessing various departments or functions, providing value additions in internal audits, branch audits. There are large branches. I've just given you an example of corporate agents because I'm in the insurance industry. For a manufacturing industry or non-insurance industry, you could say distributors, third parties who are tied up with you, vendors, audit of those people, third-party people. Management request audits, again, very important. Always in every audit schedule, you should always reserve some area for management requests. And, many times management has come back to me saying, Sundar, you need to look at this area. And then I have sort of attended to that request and done a management request audit. Regulatory audits are very important because, howsoever big the organization may be and also a great organization may be, there are too many regulations and regulators, and it's a cause for concern because you need to comply to be above ethics, above standards, above global principles, and ensure that you're not fined and your reputation risk is not impacted. For every audit issue, there are two impacts: financial impact, reputation impact. And sometimes larger your reputation impact is more important because it brings down the share price. Therefore, you have to be careful as to how you do the audit and how do you assess risk in terms of reputation. And of course, a strong presentation to board, and you could also hire experts, specialists to do special risk reviews, which are independent of the department or function being audited. I won't spend time on the other aspects of enterprise risk management because focus today is on internal audit. But I thought just give you a broad overview for insurance company in terms of operation risk. You see a number of things that we do: risk assessment, risk investigation. Incidentally, audit also does risk assessment and investigation, which is different from the risk assessment and risk investigation done by compliance or risk. Risk sensitization, audit also does audit sensitization. RCS says control self-assessment done by various departments, functions, very useful as input for risk assessment. Risk reviews are specialists who or experts from outside who do independent review, very important for audit as inputs. Risk dashboards are very important for auditors. Fraud prevention is extremely important for auditors. Whenever an internal auditor or external auditor audits my enterprise, they always have a point to meet up with me and find out what are the frauds that were involved, how were the frauds, what was the value of fraud, what is the RCA, how does Sundar Krishnan ensure that the reputation of that company will not go down. And this is very important, and even in company law and various other disclosures. Again, business continuity planning, very important in terms of climate problem that we have. You've seen temperatures going up. 145 personnel in the elections died this time during the election because of climate. Floods, rise in temperatures, humidity, floods again, and then earthquakes, then faulty layouts of roads, building, water issues. pollution of air, pollution of water. We're facing all this day in, day out, especially if you're in large cities in the country. Therefore, there is a need to holistically tap up the resources, put in good systems and processes to manage it. Government, of course, has done that and highlighted the risk. Regulators have highlighted the risk. But there is much more that needs to be done because of the population problem we have in terms of making such issues even more glaring. Or when you face the issue, it is even more glaring. And so for business continuity planning is key. And ESG is key. And then you need to have audit committee, risk committee. But this slide being risk oriented is risk committee, but we'll go to the audit soon. I'm not spending time on other aspects highlighted here. I'm only focusing on audit. So we soon go to audit. In the corporate governance, there is a quarterly board meeting that is required and a quarterly audit committee meeting that is required. Incidentally, the chairman of auditor and chairman of audit committee and chairman of board needs to be different to have independence of the board and the audit committee. And this is required more so by the regulators, especially in BFSI. And of course, there is monthly meetings internally held so that we are ready for the quarterly meeting. Periodic meetings of the conglomerate or group if there are group involved, and independent third-party auditors providing value to the audit process. Need to have audit committees, as I mentioned, separate independent director chairing both. And then you need to have colors and screens and scores. So this is a sort of a slide where you have gross risk, controls, and net risk. You need to look at likelihood of the risk and the severity of the risk, both separately and for every sub-process, process, function or department, sub-department, sub-function, and what could go wrong for each, controls for each, and net risk for each, managed by a technology. So I thought from theory or principles, let us go down to how do you audit? There's a very interesting case study, and it's a real case study that came to me. It's actually a global case study, nothing to do with India, but very relevant also. When you look at the context, it's of a bank. When I was in the banking world, this has come as a query. Had come to me as a query in terms of how do we go about auditing the bank. And this is a large bank, XYZ Bank Limited. It had lots of branches, one of the oldest bank. Strength was in retail, vast network of branches. Again, as I told, this is not in India, it's outside India. I'm not going to name the bank. Consumer loans, housing loans, mutual funds, savings account, credit cards, wealth management were the areas the bank focused on. It had a strategy of promoting heavily the payroll services. Basically, it will catch a large company and say, "Aapka salary hum kar dete hain." And so the employers would park the salary processing to the bank. And of course, the money that you earn is not much, it's a lot of work. And sometimes it's a loss leader because you have to implement systems, process to be careful, confidentiality of the data, encryption of the data. But it gave a lot of current accounts this way to the bank. And its research had shown them that most consumers only deal with one institution. So what they would do afterwards is they would give more services to the bank. Hey, the bank is managing our salary. Let us give corporate banking to the bank. Let us give trade finance to the bank. That way you would get more and more pull from the customer. So what was a loss initially will become a profitable aspect later. And they felt this is a cornerstone of that bank. The strategy worked till 1998, and the bank was a top consumer leader. And for the 8th straight year, the bank was having a share of 33%. But suddenly, the share market share went down by 2.5%. And year 2000 showed another decline of 3.2%. This loss of market share was very shocking to the management of the bank. Consumer lending was the most profitable product. and yet the market share was declining. Where were the clients going? So they did a lot of R&D on this. They did a review of the competitors and the competition. Found, of course, the competition was severe, and research and analysis showed consumers were being more sophisticated and shopping for better rates. So consumers were getting more savvy. They were demanding more convenience in dealing with FIs, financial institutions. Again, there were some niche players in the market. There were many virtual banks, no branches at all, only online. Clients dealt with over the phone and through the internet. There was 24/7 operations. And they were able to approve 90% of the loans immediately. Only 10% of the loans, they took some more time. But even that, they were managing to clear by 12 hours. Rates were lower than the XYZ bank. Lower overhead again because they were virtual bank. So through market intelligence also, XYZ found there's another bank, ABC Bank, which was driving the competition aggressively and was planning a major consumer loan campaign in the next year to shore up the dwindling marketing share, the ABC Bank. So they said, enough is enough. Let's have a strategy exercise. Let's see what is wrong. So in the mid 2000, XYZ's bank's executive management team planned a big meeting in offsite and a strategy for 2001. The main topic of the discussion was how to stop the decline in consumer lending. So they did a SWOT analysis. They found that the strengths were largest branch network, largest processor of payrolls, largest consumer base. Then what were the weaknesses? The weaknesses were not developed internet capabilities, no call centers, turnaround time of approval was 48 to 72 hours. Whereas you saw even for 90% of the cases, the instant and 10% within 12 hours for others. High overhead again, limited hours of service, 8 hours only. And loans required consumer to visit the branch. You don't get it at home. Whereas competitors were giving at home. What were the opportunities? Opportunities were plenty. Large base of satisfied clients who had previously paid off their loans. Consumer confidence was growing and demand expected to increase. Earlier adopters of new technology almost exhausted. And what were the threats? Threats showed that more people were using internet. And studies showed more people were working shift or flexible hours. And ABC Bank was targeting the consumer market very, very drastically. Again, continuous influx of foreign virtual banks that were serving clients from service centers outside of the country to obtain economy of scales. So what did the strategy meeting do? They need to conclude. So the conclusion was, it was wrong decision not to try internet banking. And suddenly to catch up now, it will take 2 years because you have to ensure security. I don't know how many of you know, today you need to deploy at least 35 to 40 tools in security to have holistic security. And that's become basic need, unfortunately. There's no single solution available that will take care of all your cyber security requirement. There was no call center, which was a big drawback. Choice of city, not good. Call center would need talent pool, which is not easily available. The land and labor was cheaper in that area. Internet and call center would take 2 years to develop. This is in 98, 2000, 2001. So understand that. Today, things are faster. Need of the hour is an immediate solution. What do we do now, given the background? So the decisions of the strategy meet where empower loan officers to disperse on the spot with limits and criteria, instant When I went to, I remember when in 1993, somewhere around that time, went to the bank, HDFC, not bank, the financial institution. I was just interviewed in 10 minutes on the system. And of course, the people were there. Within 10 minutes, the loan was given. 15 minutes. That's it. Of course, I had to give some documentation, which was asked for, and they gave it out very, very fast. So this is key to housing loans, especially. Empower loan officers to disperse on the spot limits and criteria, handling clients who speeded up from slow and repetitive response. Media advertisement had become expensive and not productive. So marketing campaign would be direct and towards the existing base, which means calling the customer or reaching out to the customer. Incentive to loan officers for cold calls. Today we have problems of, again, calls being banned or controlled or regulated. You need to use proper numbers, proper processes, etc., etc. Again, implementation criteria for on-the-spot loan disbursements are done. No disbursement above limit of 60,000. Good track record. Credit of pay or repayment of earlier loan. Loan officers to be rewarded of business brought in. New market campaign, instant credit disbursement, home improvement plan, tie up with builders, transfer of credit card balance of competitors, vacation loans, school fees aid. And when these were implemented, what were the results? Let's see the results. The committee later felt these are the results. The results were that in January, there was a 1% increase. Delinquency was 2.5. Market share was 33. February again 3.5, 2.5. Stable. March also was good. There was a slight increase in delinquency. February and March, there was a slight increase of course, 1 to 3.5% in terms of better, more loans and more market share in March. Then April, more increase in loans, 4%. Market share increased to, but delinquency also increased to 3.5. Market share also increased to 34.25. May, 4%, but delinquency has gone up. This kind of delinquency is very bad, even in our country now. So 4% being delinquency, even if it's at a gross risk level or a gross NPA. Market share again improved to 34.75. June again, market share has now come down from 4 to 3.5, increase. But delinquency has gone up frighteningly above 4.5. Market share has gone up 34.95. Then let's see what happens in July. 2% only is the increase. It's come down now. Delinquency is going up like crazy, 5%. Market share is coming down from 34.95 to 34.75. August, 1.5 only is the increase. Market delinquency has gone up crazily high, was 6.5. This is a very bad number. And market share is coming down. September, -1. No growth, decline. Delinquency gone up crazily, 8.5. And market share come down, 32. So things are not going well as in the first 3 months, Jan, Feb, March. So what do we do? And let's look at the non-statistical results. So the statistical results which are bad financially, reputationally. Of course, there was a new loan application, new collection application, but there have been several resignations. Annual campus recruitments were done, but there are 2 frauds, big ones. And customer complaints have gone up. So as an auditor, what is your brief? The brief is a list of deliverables information that you would initially need, request from management to enable your work to begin. What issues you would expect to find. In a risk-based audit, you need to be clear what risks you expect from the interviews that you do of key personnel, reading that you do of the company, research that you do of the company, database analysis of the company. You need to be clear what risks you would find, risks and controls you would expect to cover, what you're going to look at specifically, what specific tests you would like to undertake to ensure that the risk management and control framework is adequate, effective, and sustainable. What is adequate? काफी है कि नहीं? Effective? चल रहा है कि नहीं? Controls may be there, but it may not work. And sustainable, long term chalega ki nahi. If you go back to the statistical results, long term chala nahi. Delinquency has gone up from 2.5 to 8.5. Something is crazily wrong. So it's not sustainable. Was it adequate? Proved out it was not adequate. What is effective? No. 4 mahine mein problem hai. It was effective and adequate probably for 3 months, 4 months, but soon you saw the results. So this is the audit brief. You can take some time and look at the deliverables that is asked. What are the deliverables that are asked? List of information that you would initially request. What are the things you would ask for specifically if you're doing a risk-based audit? The other point about risk-based audit versus internal normal audit is that in risk-based audit, you ask specifically the exact thing. I remember when I was doing traditional audit, I remember some of the client staff used to remain, Sundar, aap barabar pakad lete ho cheezon ko. Perhaps the risk orientation was there running in my mind psychologically, although not documented well, no system. Somehow sixth sense, help from God, luck, whatever, as to get somehow the meaty issues somehow, but not necessarily all issues, and not necessarily the system recommendations, not necessarily the controls that need to be there, not necessarily the quantifying of risk. So in risk-based audit, to be very clear, because it's a big company, and traditional audit is not now possible also given the size, complexity, and nature of the client. And therefore, risk orientation is key. And when you have risk orientation, that is key. You need to be very clear what are the exact things you would ask. And in this case study, what would you ask the client? It's very important. And so let's look at what are the preliminary information that is taught or got. Analysis of frauds that have happened, because there were 2 frauds, if you remember. Statistics of the credit disbursement by RM, relationship manager wise, loan kitna hai, frauds kitna hai. Market competition analysis, very important to understand what competition is up to. BPR changes, क्या change किए, क्या controls सुधारे या बिगाड़े, in this case बिगाड़े. Application controls क्या हमने छोड़ दिए. What are the program changes that were done? What are the access controls now given? If something has gone wrong drastically. Preliminary information again. And what are the issues you expect? If you go back, what issues you would expect to find is the next question to you. So the answer is, you might expect credit risk issues. So you'll need to go through pre-sanction appraisal, post-sanction appraisal. When you are do credit, you need to do pre-ratio analysis of the client, what all things you would need to check, then what all you will add value, what all the client requirements are been asked for, etc., etc., etc. Documentation called for, and then operation of the loan, and then post-sanction follow-up. If you are a manufacturing client, then you need to get data of closing stock, opening stock, current ratios, working capital requirement, non-working capital requirement, usage of funds, fund flow, cash flow, etc., 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 etc. And again, all 3 are very different. When I did a security review in a bank, it was like humongous. When we did a holistic security review, thematic review, we found so many issues in the security documentation, security controls. And so we added value in terms of what needs to be exactly asked. And then you should ask first time correct. Keep on asking client for more and more information, they will be irritated. So you need to be very clear. what documentation you would ask, what you would exactly require, understanding of the client. And today, banks and good companies use artificial intelligence and data to ask exactly the right thing from the specific aspect from the client. For instance, if you do audit of a transcription company, what exactly you need is to be asked. I mean, I had done one in Chennai in 1993, 94. And it was very, very interesting because you need to do a lot of research beforehand to understand the nature of business. I mean, here is a company which actually trains people for 6 months to understand the Western way of speaking because they have to speak to Western clients 24 by 7. Here is a client which teaches how to understand what the doctor speaks because there's, of course, tape, but you have to understand the tape well. Therefore, there is a 3 months training or 6 months training on the medical terms and technologies. And it was very interesting client in Chennai. So, and an interesting experience. So, risks have become specific. Risk-based audit is very specific, and you need to be expert slowly and add value to the client from a business sense. So, information system risk issues again, improper accesses. I remember one of the client. Everything and all kinds of access was given to the CEO, and CEO should never see things and used to give it to the secretary. And it was a big fraud committed by the secretary. Then I asked, why are you giving such kind of accesses when he doesn't want to use? नहीं बड़े आदमी को सब ज्यादा देते हैं छोटे आदमी को कम access देते हैं अरे वाह very good. So you have an issue that if accesses are given this way, you would have a problem, and people do that, and many installations, many clients, they don't change the default accesses. They don't go through the manuals well. They don't study what needs to be controlled. At the end of the day, access need to be done by business, not by IT. And so you need a IT savvy, client savvy, system savvy person in the business to understand what is the system, what is the admin, who needs to be given what access, what are the kind of log, and the person who does the administration should not have any operational access in the system. These are a very important stuff. But when you audit, you will find so many gaps. Again, systems are not tested well. I remember a fraud in Gulf. I don't know where you are aware of Swadhan and Suvidha. And when banks tie up with each other, one bank you can withdraw another bank, one bank's ATM. And so this was done in Gulf, and a customer from Qatar can withdraw from Dubai, and Dubai withdraw Qatar also, location also. And though you may not have the account in Dubai, but they are connected now. So this was one of the client where the client had come from Qatar, and then when he withdraw from the Dubai ATM, he found that his bank balance was not reduced. So in Dubai, if you live in Dubai and if you know, there are good kind of, I'm a Middle East expert, so you have good kind of shopping malls and you can blow off your money like crazy. Life is very nice. So the customers were happy, and some few customers who got this enjoyed the money until one employee of the bank realized this mistake. And the bank was extremely control driven, risk savvy. But the mistake happened because only positive testing was done. The positive testing was connectivity मिल रहा है, हो रहा है transaction. Negative testing was not done. Bank balance नहीं है. तो दूसरी कंट्री में अलाउ करना चाहिए कि नहीं करना चाहिए. मतलब कटार बैंक में कटार अकाउंट में बैलेंस नहीं है. तो दुबई में से you have to prevent the transaction from happening, but that was not done. And so in Qatar he was not able to withdraw, but in Dubai he was able to withdraw. This is the problem. Inadequate testing because they were super active, super savvy to do the connectivity and get on with the job. And therefore, users were not adequately involved. Testing was not adequate at the point of tying up. But originally, they used to do good testing. And when I did the investigation, I found the control culture was good. Program change controls were good. But sometimes you speed up, you don't do adequate testing. The negative testing wasn't done. So you could have issues of such nature when you audit. Similarly, how do you do the BPR? Whenever you do a transformation, you need a BPR, good BPR, business process reengineering, reengineering the process, re-engineering people, re-engineering controls. And when you do BPR, you need to be ensure controls are not loosened, but even if it loosened, are monitored effectively. So in a BPR, always you would have some kind of changes in the control environment, some kind of changes in systems, some kind of changes in the process. There will be some liberalization, but there has to be effective monitoring of that in terms of good system reports, good analytics, good data, and good follow-up and actions on the data. There could be HR issues, new recruits not coping with the challenges, leaving the company. You noticed that the attrition was high, inadequate training of new people, incentive again misused. Again, there could be system adequacies. Many companies, you might have a good cyber security, but they may not have good system functionality. The apps may not be good enough. There could be inadequate MIS or information management, user requirements not met adequately because users were not involved well in the transformation. Inadequate controls over collection processes. You saw how the delinquency had gone up crazily. And so, what were the controls on collections? Sometimes in a retail business, collections are extremely important. MIS is by hour, and you need to get system problems immediately. Alerts needs to be generated immediately. When things were not automated or analytically driven, it used to come at least in the day end data, and data has to be followed up quickly and reviewed also. The boss reviews the data of the subordinate and asks him to do follow up. So if that follow up was not done, you could lead into delinquency. Bad debts. Market risk management again could be inadequate because you don't know how the interest rates are changing. To see because of good Morgan Stanley fund, JP Morgan funds coming in, the yield on government bonds have come down. So how does it impact business? How does pricing get impacted? How does reserving get impacted? These are changes that you need to measure. Customer complaint monitoring again. Many customer complaints would show you many system weaknesses, process weaknesses, culture weaknesses. Also, you would get to know complaints well. Then you would get to know even fraud possibilities. And many times frauds also comes out from complaints. And even in the Gulf incident, I remember it was actually the employee who lodged the complaint that led to investigation. And that investigation then led to the finding that 5-6 कस्टमर ऐसे हैं जो enjoy कर रहे हैं. And so we found out the fraudsters and gave them to the Interpol. Customer service issues again, mishandling of customers, because many times due to transformation, customers are also have to go through changes. But employees may not handle them properly. They'll throw them here and there because they also themselves don't know what is the new system, what is the new control, what is the new culture, what is the new process. So these are the potential issues you would expect. So list of deliverables we saw, issues you could expect to find. What are the risk and controls you would expect to cover in your audit? Very important in a risk-based audit to understand this. So going forward, these are the risks and controls you would expect to be covered given the results, given the background, So you could have a credit risk problem because of delinquencies, inadequate analysis of customer borrowing power, capacity, end-use management. So post-credit risk appraisal is weak. And therefore, controls, you would look at what are the controls that are there. System control, non-system control, MIS, information system risks again, user requirements not with users were not involved in the testing, users not adequately involved, improper accesses, application security risks. And therefore, best frameworks are the controls that you would need to find. So you put in ITIL, COBIT, ISO 27001 control. So insurance companies now have to follow NIST controls. So in cyber security, so you have to go risk by risk, control by control in NIST and map the business, and then find out the gaps and comment. The auditors are expected to do that in the insurance companies already, and they have to give a report saying that all the controls have been met. And if not met, they have to qualify the controls. It goes to the board. Boards then deliberates the issues, and then the report goes to the regulator. So these are the controls prescribed by regulator today. And chartered accountants have a brilliant opportunity here to add value to the BFSI client. Again, operational risk, inconsistent process, credit inconsistent because you follow the old process. Some people are not aware of the changes. Credit delivery issues again, you not delivered the loan properly, not followed up, new people, inadequate customer management, not handled the client well, handling of clients, communication, servicing, complaints, operational risk. Every complaint is an opportunity to RCA. If you don't do RCA, you have a problem in hand. Operational risk management, again, customer management controls. Collections management, again, you see collection is a big issue because the delinquencies have gone up. Inadequate collections. MIS, again, fraud risks. 2 frauds were there, so there is improper follow-up frauds. Collection management and fraud risk management. You need to look at that. What is the stress on KYC? For instance, in India, every PAN is validated with NSDL by a BFSI company. Similarly, Aadhaar is validated with UDAI. And then if you have a phone number, OTP goes to the mobile and it is checked. Or you could have another way of control through the process of BOT or through biometric. Again, recruitment of inexperienced and unqualified staff, HR issue, inadequate training of new recruits. Certainly, they are not able to handle the changes. Customer handling process, not stressed. Misuse of incentives, strong HR practices are the controls you will look at. Something, of course, has gone wrong in the case study. Then what is the pressure on interest rate? Change on profit versus competition. Inadequate systems and MIS to handle the challenges. Market risk management is a problem. Competition has gone up. What is the impact of that on pricing and profits? Your reserves have to be more. Profit has to be clawed back for the NPAs. And mismanagement of changes. BPR risk is the biggest risk here. So you would look at inadequate monitoring of MIS. How is the MIS monitored? Are the risks acceptable or not acceptable? Might have to claw back certain processes. Retail banking parameters you have to look at. People risks not monitored well. Key processes not monitored well. So you look at inconsistency in processes again, standardization again, non-standard processes again. One department might have very good process, another department would have shoddy process because the processes are not standardized across the company. Again, you could have a BPR problem, the change not monitored well, key control standards not done well, strategic risk issues, again, inadequate vision and mission, development of business and IT strategies not done properly, development of business plans and IT plans not done properly. So you have to look at controls on how IT plans are delivered, how business plans are delivered. Is business and IT congruent with each other? Are the IT strategies on the basis of business strategy, etc., etc.? So these are the risk and controls you would look at. What other brief we have got? We wanted preliminary information. Then we got what issues you would expect. We got what risks and controls you would expect to cover. The last slide or last brief given to us is what are the specific audit tests you would undertake to ensure that the risk management control is adequate, effective, and sustainable. We found in our case study it was adequate only for 3 months, effective only for 6 months or 3 months. And then sustainability came into question in the third quarter. So let's look at what are the specific tests we will do. The specific test that we would do is credit risk management, compliance testing of credit risk practices. Compliance testing would mean you would see whether the process is working, control is working, and that control is working or not. You will not do a deep study. You will not do substantive audit in a compliance test. Then based on results of the compliance test, you would decide whether to do substantive test or not to do substantive test. But if the area is inherently risky or gross risk is high, then you will do substantive test. You will do some kind of sampling, especially at least 15 samples if you're a SOX client, Sarbanes-Oxley, or you might even do 25 clients, 25 samples or a 15 samples. So depending on the type of company. So substantive test of appraisal process I will do because it's not working. IS control test, again, you will do a user access matrix review, which is ensuring that right accesses have been given to right personnel. This is again requires business knowledge. It's not IT, but it needs business IT controls. Walkthrough of functional requirements means process review and functionality review, and testing of adequacy of banking application. These are the applications serving the purpose. Here again, you will do substantive tests of program change controls because something was gone wrong. Adequacy of testing inclusion, whether testing has been done properly. HR management control, again, you will do walkthrough of recruitment process, walkthrough of training process, means review of the process, review of this, substantive testing of BPR training rollouts, whether the BPR training or the business process reengineering training rollouts have been done properly, you will do a substantive audit of that. Then, of course, collection management controls, again, walkthrough of the collection process, MIS, what kind of MIS, how effective it is, what's the follow-up done. What are the substantive test of controls over delinquencies? However, any slippage in the payment by client is followed up immediately. When you follow up, you will know the true results, true clients, and you will know what are the problems. When I was there in one of the companies, when I did a review of the kind of appraisal that was done, found that some client was shown as a shoe dealer and a 5 lakh policy was issued. But when we found that the person's background through investigation, I found a drunkard cobbler or a cobbler with a bones also visible in the X-ray in a footpath. And he was, of course, dealing in shoes, but only mending shoes. And was unfortunately given a 5 lakh policy. This is way back, of course. These days, they would have given him a 10 lakh policy. So, of course, it will go in a bad problem because he doesn't have the money to pay the premium. And he would die also. And therefore, some fraud racket has managed to get him to sign and paid him some money and filed the policy. And so investigations revealed the address was not correct, occupation was not correct, client identification was not correct. So if you do a review, you will get to know more when you do substantive tests. Again, market risk management controls, walk through the market risk management practice, pricing decision, profit management decision, ALM controls, and liquidity management controls, etc. To do a change management control again, what is the changes of the management in terms of process, BPR, business process reengineering, walkthrough of that, and what are the decisions taken in terms of controls being let loose, walkthrough of JDs, job description, job objectives, organization chart to ensure adequacy of segregation of duties and staffing. This is very important in a PPR. Walkthrough of decision-making process, the committee approach, adequacy. I remember when I had gone to that HDFC institution, 2 people were there to interview me. And they were talking to each other and they finally, within 10 minutes, they approved my loan. Way back in the 90s. So, very important to have that kind of committee approach in decision making. Walkthrough of risk management, again, organization chart, policies, process, practices. So these are the things you would look at. Walkthroughs, compliance, substantive, access metrics review, etc., etc., etc. And these are the things you would do in a risk-based audit. What would you have done in a manual audit? You would go through the issues, find out the problems, solve the problem, but may not be a very holistic way. And we will not get at recommendations that are holistic and implementation and action plan of those recommendations, which is more important, which adds value to the business. So this is the way you will do the brief given to you as a chartered accountant. And when you do a traditional audit, what do you do normally do, or what I used to do? If it's a balance sheet review, we do, of course, the financial analysis. Then we do complete ledger-wise balance sheet P&L. We share it with the staff. Each staff does the area, each area. They put the results to the senior. We ensure all items in the balance sheet P&L ledgers are covered. We split the departments and processes. We look at past results. We use our experience and past results. And we do several sampling audits on many, many areas, not necessarily covering all risks. And then there's a review by a senior who would use his experience and look at the issues. Of course, draft report, final report. So quality of audit is to depend upon experience and skills of the auditors. Again, findings in the issues may not be systems oriented. You don't get system recommendations. Recommendation may not. I only am using the word may not reflect on the ideal solution, that is system-based controls that are needed. Business may not fully feel assured. कुछ तो किया है पता नहीं, anyway sign करके चला गया. From a future perspective, again, investigations, I've done investigations which took a lot of time. Big report. Of course, we felt that we have added value. I don't know what the client wanted, but then we give a fat report. But by the end of the time, we did the audit of that company. Company had already implemented many recommendations and gone ahead. So there is too much of time-consuming exercise that gets done, and there is too much time spent on false positives. That's again a problem. Whereas in a risk-based audit, these things are done by systems, and analytics run that quickly. AI actually does in minutes and gives you the results. So it's fast. And then you cover entire audit database because the system runs through the entire database, gets the correct positive and not false positive. You get true positives. And then you get specific recommendation based on data, analytic data. So that's the difference between a risk-based audit and a traditional audit. I'm not here to criticize traditional audit. I also was a traditional auditor and used to love the traditional audits that I did. But all I'm trying to do is a comparison. And in these days of complex, time-consuming problems, we have time being short. Risk-based audits have become almost a necessity because you specifically identify risks and controls, checks and process, and your decisions are analytics-based, your decisions are CATS-based, your decisions are controls risk-based, and your decisions are strategic also and tactical also. So the audit profession needs to have a long-term horizon in place, needs to be based on long-term perspectives and dashboards, needs to do quantitative risk assessment and qualitative risk assessment. Everything cannot be quantitative. Need to have a good risk culture in place to do self-risk review and audits. You need to ensure your client does self-risk audits, self-review. The client doesn't do, must instruct the client to do. Sign-off procedures, whether they are good, what's the culture, how well it is embedded in the organization, how well people are compliant, what is the culture of the board, what's the culture of the management, what's the culture of the employees, are the employees falling in line with the management, is the management falling in line with the board, digital transformation initiatives, how they are implemented, what are the audit analytics that you will run and alerts that you will run, how does the audit dashboard look at, how do you do proactive risk monitoring, how do you come in within 3 months, every 3 months you come, do proactive risk monitoring, creating a risk rating culture within the organization in terms of scoring and drag colors. Is the client certificate driven, culture driven, standards driven? Is the CATS used by the client also apart from you? Is the client using analytics apart from you? Is artificial intelligence used by the client apart from you? And how is the 100% of database covered in a smarter way? Is what you will look at in the internal audit. And of course, there has to be continuous improvement process and adoption of best practices. You have to look at what the competition is doing, what is the global world looking at, how are the dashboards done by globally, what are the monitoring global companies do, what are the RCSAs companies do, what are the reviews that companies do, what are the proactive early warning risk reviews and branches they do. what kind of follow-up you are done by divisions, zones, etc., etc. So risk-based audit is more data analytics driven. You could have a predictive analytics, which is expectations and actuals. For instance, in insurance companies, we do claims expectations when you do pricing. But if the claims go up to expectations, then you need to take steps to tight control the underwriting, tight control the credit process, and then ensure your new business, your operations of branches, your underwriting, everybody is falling in line. In insurance, there's something called non-standard reports and standard reports in underwriting. So you cannot expect the underwriting of certain areas, like there could be 180 to 200 areas in the country which are risk prone. This is done by the underwriting corporation or underwriting association. And if in these 180 areas you follow non-standard reports of KYC or identification of client or credit appraisal process, you will have a problem. Therefore, you will have to ensure that these areas by risk are more red, so you would follow conservative practices. So everybody have to be fall in line. It's a teamwork. It's not a single man job. Risk management alone cannot work. Everybody needs to do risk management. Good matured organizations like the organization that I work for have this line 1, line 2, and line 3, which is, the line 1 is the branches, the divisions, the zones. They have to do the risk management themselves. And then the line 2 is the risk management function, and the line 3 is the audit function. And this is where you come. And the audit is very important because it provides assurance to the board. Sorry for the break. Yeah. Then there is a prescriptive analysis. This is by the standards and actuals. So standards, limits, and then how does it look like? In engineering companies, you would have this in a much more sharper way through systems. In BFSI, it's again done through analytics, and the deviations are taken, and the deviations are actually seen carefully. There could be a red deviation, there could be an amber deviation, there could be a green deviation. So you look at red deviations and take steps. Similarly, we will do risk assessments again by area by area. I've just given an example of claims in an insurance company. Again, I have to isolate COVID and non-COVID. COVID, the claims were very high. So I have to look at non-COVID data. Again, you would do location-based risk assessment. As I mentioned, 180 locations are bad. Occupations, certain occupations are bad. Occupations are also not clearly defined, like the shoe dealer and cobbler that we saw. There, again, they will write business. We don't know what business in the occupation, what kind of products they have taken. Again, there could be a suspicion, high risk claim. We'll need to do a regression analysis, take out probabilities. We used to do this in one of the company. Grading of risk and actions. Similarly, we will do a persistency risk assessment. This is very important to a life insurance company. How persistently the premium is paid year after year. And so you look at 13-month persistency, 25-month persistency, 37-month persistency, 52-month persistency, and so on, 7-year persistency and 10-year persistency, up to that. Today, regulator is asking for 10-year persistency from many companies. And so you need to look at that. Behavioral analysis again, and modeling and application of optimum models again. Underwriting again, client rating, ECS tagging, fraud risk assessment. What are the fraudulent areas? What are the fraudulent occupations? What are the fraudulent locations? So even if the best company in the world would have frauds, because today the world is going in a very sophisticated way. Systems are used to commit frauds. The fraudsters are ahead of the businesses. They use AI, they use so much of, in the Anthem case, you would have seen what the company had, what kind of controls. They had excellent controls, but still they were hacked and data was breached. So you could have problems in any good company today. And therefore, you need to be careful. How do you do the analytics? How do you do deploy controls? And how do you manage risk? This is another sample that I'm giving. Again, a sample. How do you select samples? How do you do, like one of the companies did this. Now most companies do this. They have categories of clients into very high, high, medium, low, and no, where you get dead man, you get a person suffering from very critical illness and who die in few months being insured as good person in the proposal form, in the photograph. Some people manage even the tapes. Then companies have started using blinking technologies to see if the client is blinking the eyes in a very efficient way. And 85 would be, or above 75 would be shown as 55 if the age is 55 or 60. Then again you would have somebody who's not at all existent being insured, somebody's occupation not being clear is insured, somebody who's not educated at all being insured as a graduate or a undergraduate, etc., etc. Again, in the high risk areas, again could have contactability issues. Person who is not contactable at all, maybe is traveling. Sometimes you get genuine issues. Sometimes, mostly you get non-genuine issues. And non-disclosure of non-critical illness, again, blood pressure, diabetic. So in these cases, we actually increase the premium and cover the person. We don't cancel the policies. In case of very high and high, you cancel the policy straight away. In case of medium, you give it back to the sales to find out where is the customer. So this is how you take actions. Again, you could have early warning signals and alerts, especially with analytics. And you could do defining internal thresholds for various regulatory or board level parameters. There could be in insurance companies, product filing parameters, investment limits again in the banking or insurance or a mutual fund. There could be trends, lead indicators, again, projected versus actual. There could be a color modeling of process, department, function. So again, very important for all corporate clients, fraud risk monitoring. You have to comment on this as a chartered accountant. So you look at alerts, you look at occupation, you look at location, you look at product, you look at age, appearance of the client, etc. If it's a retail business, this scoring and RAG modeling, again, how well the client is doing this, lead indicators for each department, ensure his management policy is updated every year, there is a dashboard every year, and there are recommendations in every department, very important, at least two. You look at enhancing the automations. You would look at scientific model of pre-issuance, post-issuance. This is again example for insurance company. You could use it for banks, you could use mutual fund, you could use pharma, you could use in manufacturing. You could do a pre-issuance verification, post-issuance verification. You could do triggers. You could do early warning alerts, high, medium, low, again by systems. New systems again, limits, again automated limits, automated triggers, early warning reviews by independent people, experts. Very important to have disciplinary process in a retained company, because if you do not fire culpable employees, fire people who have committed crimes, mis-selling, and reputational risks. If you do not fire such people, you would have a problem in the organization in terms of culture. Very, very important. Automation of STR, suspicious transaction report for the AML and money laundering. Again, you need to run triggers here. You need to run good systems. AI is being used now. There was a case in Singapore where there were about 5-6 luxury cars being damaged. And you saw the photographs, all the damages were correct. And all happened in a month's time. And photographs were there, cars were purchased, invoices were there, values were right, drivers were there, photographs of even the accident, the signal was there. But company felt something is wrong. You cannot have suddenly 5 luxury cars in a month being damaged. So company called an expert company, and that company used artificial intelligence. And with the data modeling that they did, they found the drivers of the luxury cars were all from the same condominium, same complex. And this is strange. How can all the drivers of all the cars, all the luxury cars in a month be in the same compound? Then police was called and these drivers were naturally grilled and questioned. And they found that the accident were deliberately done. Then they found out why. Did somebody damage a luxury car so deliberately? Then they found that all the cars were bought in Malaysia in cash. And they were driven down to Singapore, and then in Singapore, they were damaged. And they were all done for money laundering because then the gambling, then cash was converted to white through claims that were supposedly to be paid in white. So, very interesting, but artificial intelligence was used. And this is what happens when data is analyzed. You get lots of triggers which are red, which are amber, and then which gives you a faster result. And this is the fundamental difference between a risk-based audit and a traditional audit. Maybe a traditional auditor with good experience in insight and sixth sense would have found this, but they didn't find, because there were investigators who investigated these cases and certified that the claims were correct. So this is a very good example, actually. Then we could also have fraud monitoring triggers like this. And then, of course, what is important is a GRC tool to coordinate risk audit compliance, so that compliance people are aware of the risk issues, risk people are aware of the compliance issues, and auditors are aware of both the issues. Very important. So what value it adds to business? Last and my concluding slide. It basically gives strategic recommendations to business in terms of new business opportunities, sort of the business, automated controls and processes, tactical recommendations, specific controls, process, risk mitigation measures, action plans and follow-up of those actions, reporting to the stakeholders, and finally, assurance to the stakeholders that risks are being managed adequately, effectively, and sustainably. I've forgotten those two words here. I've just put effectively, but assessed and sustained also. Very, very important. So I thought I'll throw open it to discussions or questions if anybody has. But risk-based audit gives a lot of value to business in terms of assurance and tactical and strategic recommendations when implemented carefully and methodically. So I throw open to the audience for questions.
Yeah.
That, to make this conversation interesting. So if any of you have specific questions, please feel free.
Yeah, sir, I'm just reading out. There are a few questions. First of all, thank you for this wonderful enlightening session. And we got a very different perspective with respect to the internal audit. And sir, there are questions from the participants I would like to ask from you.
Sure.
Yeah. The question is, so whether risk-based internal audit and checklist-based audit both are mutually exclusive or not as per RBI guidelines on NBFCs and UCBs? Please.
Sorry, RBI guidelines?
And UCBs.
Ah.
Please suggest.
Sure. So checklists, whenever it's done well from frameworks like NIST, ITIL, or 27001 ISO, they sort of give you some kind of comfort, some kind of assurance that you are following best practices. But they're only a tool, one tool in the risk-based audit. It doesn't substitute the judgmental, qualitative risk assessment that you need to do. It doesn't substitute analytics that you drive. It doesn't substitute assessment of data. It doesn't substitute assessment of judgment. It doesn't substitute business experience. It doesn't substitute specialization that you bring to the table. So a risk-based internal auditor, mind you, is part of the management committee of a company and part of the board. So he has to be a very experienced person, business savvy person, and needs to add value to the business. The board of directors need to respect the auditor in the audit committee and look forward to what kind of recommendations that they bring to the table. And believe me, many times I've found the CEO or the chairman asking us all over, "Tum kya karte the? These are the findings the auditors have brought. Why you have not done what they have done? Why you have not done effectively what they could do? They are in 2 weeks' time or 1 week time brought these issues to the table, whereas you are lying here and not doing that." So, of course, this is a very negative interpretation of what I'm saying, but the internal auditor adds a lot of value. So, it's just not the you know yeah, sorry. So it's just not stops there. I need to add value, and these are the things. So checklists are important, but it's only a tool.
Okay.
To answer the question.
Thank you. The next question, and being asked by other more than one participant, it is, what is the success percentage of risk-based internal audit?
What is the
Success percentage?
depends now. Now you would find there are many organizations and many persons in these organizations who have done extremely well in terms of ESOPs, in terms of bonuses, in terms of profit, and not because they are part of the organization, but because they added value.
Yes.
Because they brought to the table what they could bring. The success comes from the sustenance of an auditor in the organization. They are very respected people. In large organizations, you will find the people who head audit functions are respected a lot because of the knowledge, because of their experience, because of the value they add to the table, because of the issues that they bring in. And so success rate is quite high, especially if you are a good risk-based auditor who uses tools, who uses technologies. I remember I got several awards in some of the organizations because of the analytics that I brought extra to the table, because of the benchmarking I did with competition, because of the connections that I had with the regulators, because of the satisfaction of the regulators of my personality or my style or my understanding or my risk issuance, risk management, etc.
Right.
So success rate I have found personally to be very effective. And I've found many people like me also in many organizations who are doing extremely well. And so they are successful. But there are many people who also cry, many people who say this organization sucks, many people who do not survive the challenge and leave the organization. Again, of course, not necessary that everybody leaves for the wrong reasons.
Yes.
There are people who leave for right reasons also. Depends again. So I can't generalize. But I would say if an audit is done well, if it's managed well, and if the guy is long term there, the person is long term there, the lady or the guy, then it is a successful profession or a successful function or a department.
Okay. They get the better, more they stay on the board, the better understanding they get about the business and the internal controls
Yeah,
and
of
the
course,
suggestions and value additions.
of course. The analytics that I drew, it took me 5 to 7 years to get the results, effective results. And every year, it's better and better. And when I went recently to the company, it's even more better than what I had done before, because the path was laid and the company is thriving on that.
Yeah.
And sometimes the auditor would lay some steps for 3 years or 4 years, the audit would run. Later on, the management picks it up and runs it.
Right.
Although you will not get the credit, but you have done something useful to the organization.
Yes. Value addition is always counted, and
yes,
efforts never get unrecognized.
Yes, of course. Very important.
Yeah. So the next question is, in this risk-based internal audit, how the auditor can identify the inherent risk appetite level of any organization. And how can he proceeds to conduct such an audit within limited time frame? How
This
to
is what
complete internal audit in a limited time frame? A
This
very
is what I covered
clear
also.
question.
This is also what I covered. Again, internal audit would have the whole year and 3 years actually. It's very important to have 3 years because high risk issues you will cover every year, medium risk issues you might cover once in 2 years, low risk issues you might, low risk departments, high risk departments you will cover in departments or functions. You will cover every year. Medium risk departments or functions you will cover once in 2 years, and low risk departments you will cover in 3 years. So 3 years, ma'am, is very important for an internal auditor. But supposing you don't get that kind of time, you get very limited time. It's a very specific audit. It's very important that you focus on the gross risks. That's the question asked. So you would need to understand business very well. You need to meet up key people in the organization, understand issues and challenges that face very importantly very well. You need to look at competition. You need to do research on data. If you need to do what are the global competitors doing? Like for instance, the company that I work is LIC. LIC, there is no equivalent in the country. So I have to look at other companies in the world, and then compare and see what the other companies in the world are doing and what LIC does. That's the kind of challenge I have. So it has to be done. There is no choice. So the stress is on what kind of research you do, what kind of analytics you run, what kind of key people you meet. Meeting people is very important because experience counts a lot. Experience gives you the sixth sense, and that judgment is very important to arrive at the right thing to do look at. And so the gross risks are known from experienced people in the company, competition, and the research that you do, and the analytics that you run, the data that you look at. And this is where you look at the gross risks. And therefore, you have to do department by department and see what are process they have, what can go wrong. But the important point again between risk-based audit and a manual audit is this, that you don't not only look at what is going on in the company, you also have to look at what are the potential processes and functions they should have done, but they are not doing. This is the difference between risk-based audit and normal audit. The normal audit look at what only is there and finished. ये control है, चल नहीं रहा है, control है, चल रहा है. But ये control होना चाहिए था, ये risk देखना चाहिए था, नहीं देखा है. The absence, the missing control, the missing risk not seen.
And what risk can be involved by not following those controls, the loss to the organization, and that should be measured and that should be analyzed and put up in front of the management.
That comes only through review of competition, review of data, benchmarking with best standards.
Thank you. Next question is internal audit for the organization not liable under the compliance check. I think they want to ask about that, whether internal audit is required for the, like, is it mandatory? Under the compliance, whether it will be counted in the compliance check.
Of course.
Yes.
So I have shown a diagram where risk, audit, and compliance, 3 pillars are there. Risk is dependent on audit, audit is dependent on compliance, compliance is dependent on risk.
Right.
They're all interdependent departments and functions. And internal audit is mandatory for many companies above a threshold. So for a manufacturing company or a BFSI, internal audit is compulsory. It is mandatory. So it is a regulatory requirement to do internal audit, number one. Number two, is internal audit looking at compliance aspects, regulatory aspects? Yes, they have to. They have no choice. Because compliance risk is also a very important risk. And if you're doing risk-based audit, you have to look at compliance risk also. You cannot ignore the compliance risk.
Right.
So that is very important. And you have to cover this in the compliance testing, not substantive testing. And more importantly, in the risk assessment to see culture. If culture is not there, then we have a problem. You have to do more substantive tests.
Right. The last question of the session, meaning of delinquency.
Delinquency means bad debts. Means this loan that I have given has become delinquent. They are not paying the loan installment, lending the repayment, or they are not paying the interest on time. There is a delay, NPA, basically non-provision.
Non-compliance of provision.
Sorry.
Yeah, please. Non-compliance of those repayments.
Yes, non-compliance of the repayment or even interest payment. So, and therefore, if it's and there are days laid down in RBI rules, etc., etc., etc. And also, company also lays down rules. इतना 2 बार नहीं दिया, 3 बार नहीं दिया, तो ये NPA हुआ. Of course, there are many ratings and categories of NPA. And if you follow up, you do provisioning, etc., etc. So delinquency means that.
Thank you. Sir, all questions are done. And on behalf of the ICAI, the Committee of Board of Internal Audit and Management Accounting, I thank you for being here and sharing your knowledge and experience with all our participants. And I thank the chairman of this committee, CA Prakash Sharma ji, and the vice chairman, CA Preeti Savla ma'am, for their unwavering efforts and continuously coming up with so many programs for the internal audit and enlightening our members with respect to the knowledge and the new avenues which can be opened up and what all risk and so many different perspective. From a different perspective, it's helping the members to gain a different perspective for the internal audit. And I also thank Nanda sir for taking out time out of his busy schedule and being here for us. And thank you all. Keep learning and do join this regular series of internal audit on that. And today it's the 15th series. Weekly we have one series. The timing, I hope that it's the same, 6 to 8. Stay tuned with the ICI Institute. Thank you all for joining. Take care.
Many thanks.
Thank you.